Hey, Steve Saretsky here. As always, the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask is that you hit thumbs up and subscribe. Appreciate the support. As always, any questions, comments, put those below and we'll banter back and forth. One more quick ask. If you get any sort of value, if you like these videos, if you can do me a favor and leave a 5-star review on my Google business page, I would appreciate that. Again, I don't usually ask for this sort of thing, but I'm trying to build that up, so I'm going to put a link to that below if you can go. I know a bunch of you have already submitted those reviews, so I appreciate that. But anyways, let's sort of dive into it. As expected, the Bank of Canada hiked interest rates again, another 25 basis points. This was pretty much already baked in. This, I told you this was going to happen. The market had already penciled it in, so the Bank of Canada is not going to shock the market. But that's neither here nor there. The thing that I'm looking at, and I've been curious, I've mentioned this in previous videos, is the Bank of Canada going to try to follow the Federal Reserve in the States with their interest rate hikes? The Fed has I think, a pretty aggressive tightening path that they've set out. Historically, the Bank of Canada has followed that, but based on where we are with this household indebtedness, real estate valuations extremely stretched. Would they follow, or would they basically just sort of sacrifice the loonie? Does it loonie maybe pushes down to 70, 65 cents and just takes a beating? Or again, do they just try to follow the United States, the Fed, and hike? And based on the commentary I got from that speech from Pelosi was that they are going to try to match the Fed or keep very close to that rate hike cycle. One of the interesting remarks that he said, he says, first of all, we feel the housing market is stabilizing. Second of all, we are expecting slack in consumer demand, in spending, but we believe that there's manufacturing and all that other stuff is going to make up for it. So again, that's basically his excuse. That's what he's telling the market. Again, whether he believes it or not is anyone's guess. But again, looking at this with record high household indebtedness, the largest credit expansion of any advanced economy over the last 5 years, Canadian households are in an extremely precarious situation. So every interest rate hike is going to be felt. Now, it might not be felt as much on the mortgage side, but just in overall debt servicing payments. So obviously the variable rate went up along with this Bank of Canada hike. It looks like the 5-year fixed mortgage market isn't going to move, or at least as it stands right now, the 5-year bond basically was frozen despite the rate hike. So not so much from a mortgage perspective, but again, that debt servicing payment with the record high household indebtedness, that is going to weigh on consumer spending. It is going to weigh, higher rates do weigh on housing markets. So we'll have to wait and see how that plays out. I mean, coming back to the stabilization thesis, I think that we're still, again, in this real estate cycle, and that's what I'll get into, where I feel we are positioned. But it's interesting to see, 1 month of data comes out, and now all of a sudden you have everybody calling for stabilization. I was listening to an interview on BNN with the CEO of Royal LePage, obviously one of Canada's largest real estate brokerages. He says, quote unquote, they're expecting prices to surge in the back half of 2018. Again, who are you getting your news sources from? Do you understand where it's coming from? Putting all the pieces together into context. I couldn't disagree more, but I have my reasons for that. I think that, again, you are very late stages in this real estate cycle, and I'm going to try to explain that. First of all, people looking at sort of micro data, because sales had sort of a pickup from flash crash last year, which was, I think, more of a reaction to the tax in Toronto, the foreign buyers tax, than anything. So they had this sort of flash crash where sales dropped down to basically 2001 lows, and because sales picked up basically 2% this year on a year-over-year basis for that 1 month, that all of a sudden the market has begun stabilizing. To me, it's kind of a head fake. I think that's what people were trying to make the argument for that last year in the Vancouver detached market in the spring of 2017, because we had a little bit of pickup. You can go look at a chart for detached prices. They came down, they went back up, and now they're trending back down again. Again, that's just like these are very micro moves in a larger piece. So everyone's getting focused on like month to month, month to month. But again, these movements in a larger scale, we have to understand you're in the midst of a rate hike cycle. With sales falling, household indebtedness, etc. I mean, you're very late in this economic expansion. I think it's the second longest expansion in U.S. history, and Canada tends to mimic that. So, just to give an example of sort of that micro data points that people are looking at, or not being able to interpret statistics. Sometimes people get too data focused. So again, you really have to sort of put all the pieces together and formulate these conclusions. But I'll give you an example, right? Is people are here in Vancouver are trying to figure out what's happening with prices. I get a lot of this thing that people go, yeah, detached sales are at 30-year lows, but prices aren't moving. But that it's the public is totally being fooled or misled. Doesn't have the full context of things. So I'll give you an example. Richmond detached housing market, 30-year low in sales, heavily influenced by outside foreign capital, which has clearly dried up. It's a market, nothing is selling, and if you look at the MLS benchmark on a year-over-year basis, the MLS benchmark dropped 0.1%. The average price, I think, increased year-over-year 9%, and the median increased by 16%. So if you really think that Richmond house prices increased by 16% year-over-year, wow, I have some investments to offload to you. Because they are down. You can go pick up the phone. I encourage you to pick up the phone, call your local realtor in Richmond. Don't just take it from me. I would argue that most realtors are probably in consensus that Richmond detached house prices are off about 10%, and on the higher side of things, those more luxury properties, they're off about 15% from the peak. So again, if you're looking at the benchmark, it looks like prices are flat, and if you're looking at the average and median, it looks like prices are still going up and hitting new highs. So again, it's just really understanding these data points. I think at the end of the day, you strip all that back and you try to figure out, okay, well, where are we today? I've talked about late or cycles and late cycles. Well, let's understand what a real estate cycle is. So typically, as you come out of a recession, Canada, 2009, sales start to pick up. As sales start to pick up, volume starts to pick up, your prices start to rise. As prices are rising, that you start to draw in more buyers, you start to draw in more investors, people that are maybe starting to look to speculate in the markets. You might have more investors saying, oh wow, look, that I just made a bunch of money, or prices are rising. So as prices rise, you tend to get more flipping activity. And then as prices start to rise, the market conditions start to look good. That's when developers start building. That's when you start to see lots more pre-sales coming online into the market. Construction starts to ramp up. And eventually, these sort of sales numbers, like as we've seen over the last couple of years, sales can't keep hitting record highs each single year. Eventually, demand starts to slow, whether that's from interest rate increases, tightening of mortgage lending conditions, I think higher interest rates, government intervention. Eventually, this just starts to slow down demand. And as the prices start to decelerate, that pulls some of your speculators out of the market. And all that new construction supply tends to basically overshoot expectations. Basically, developers extrapolate current market conditions, which we're seeing prices rise, in this market 20-30% year over year. So they tend to basically overshoot. Everybody thinks that, we're never going to have a housing oversupply here ever again. We're always going to be in a housing shortage, so just build. They overshoot those expectations, which ultimately leads so all this new supply basically starts coming onto the market as demand starts to fall, which ultimately creates an oversupply of housing. This then creates your recession and your downwards pressure on house prices because you have this abundance of supply and no demand there to meet it. You get your recession, and then again your real estate cycle starts again. You come out of that recession, sales start to pick up, prices follow. So again, where are we today? We hit basically peak sales in 2015, 2016, depending on the market. Vancouver condos, peak sales of 2016, peak prices in 2017, early 2018. Right now we have a record number of new housing construction underway. The number of apartments under construction in Vancouver is 3.8 times above the long-term mean. So this is by no means a normal amount of apartment construction in Vancouver. Not to mention, so we have all this new construction at a time when our sales are starting to fall. So sales in across Greater Vancouver dropped by about 35% on a year-over-year basis down to a 5-year low. While at the same time your inventory actually increased by 40%. So your inventory is going one way, your sales are going the other. At the same time, you have new construction coming onto the market. But if that wasn't enough, the apartment completions have also hit an all-time high. So you have all that new supply that's actually hitting the market, plus you have the under construction units in the pipeline. Plus, if that wasn't enough, you actually have housing starts, which means that the project's probably another 2 years out from completion. Housing starts are at an all-time high. So you have this massive pipeline of new supply coming to market at the same time that sales have peaked and are rolling over along with the prices. So to me, that looks to me like you're in late stages of a real estate cycle. Now let's add on a few more things. You're in the midst of a real estate, you're in the midst of an interest rate hiking cycle, which is late. Like if you're late in the economic expansion, they start to hike interest rates. So you're late there. So we're starting to increase interest rates. We've now moved a full percentage over the last year, which is coming off of historic lows of 0.5%. So you're in that hiking stage. You've also have the increased government intervention, which is also it's signs of a late cycle. Government tends not to intervene in a healthy, balanced market. They intervene at peak moments when everybody is feeling pain and everybody is calling for the government to intervene. That is when they intervene. So what do? We already know: foreign buyers tax, speculation tax, school tax, increased property transfer tax, Airbnb ban, empty homes tax. There's probably a few more in there. So they've implemented that, and so that's where we're at today. Again, see how this thing shapes out. I mean, if this truly is a different time, then I'm all ears. But again, everybody, there's no reason to necessarily freak out either. These things happen. You have cycles, you have ups and downs, you have recessions. This is all part of normal. It's when you start to basically suppress those cycles and purge them that you create more inefficiencies, and that's pretty much what Canada did in 2009 by basically supporting the banks with a whole bunch of liquidity and essentially creating these policies to allow consumers to continue to borrow more and more money at a time when everybody else was deleveraging, which is part of a normal cycle. You now have created a point in time where the home valuations have become even more stretched. You have even more public angst, populism, and this basically comes from those policies. So anyways, that's pretty much what I've got. Looking at that, what's been happening in the Vancouver market. Again, just talking about what we're already seeing with prices. I know everybody likes to look at this stuff. I can give you some examples. The things that we are seeing, again, signs where it's like, make you stop, make you think. Condo developers offering decorating allowances, realtor bonuses. These are signs you're getting later. Just a year and a half ago, people were lining up in tents to get into pre-sales, and now they're offering $30,000 decorating bonus. I had one project in Richmond emailed to me that was offering a $100,000 discount on the next 3 units. Of course, once you sell those 3 units, there's always another 3 more that need a $100,000 discount. Looking at land prices, there's the old argument that land prices can't come down. Found some interesting ones in Marpole area on the west side of Vancouver. those are all tax assessed at $2 million. They're selling for 1.4. This is after they start at 1.8, reduced 1.6, eventually sell for 1.4. So there's sort of that price discovery moment where everyone's trying to figure out, okay, what's my home truly worth? This market's changing pretty quick. And so it's sort of that slow grind down. You list at this price, then you cut it, relist it, cut it. But again, tax assessment, again, I don't put too much weighting on those, but the historical in Vancouver has been that property prices, your tax assessment lagged the prices, meaning, everyone would say, well, it's only assessed, tax assessment's only $1 million and you're asking 1.4, what the hell? But that was always the case. We always said, yeah, don't look at those assessments. But now you're seeing the tax assessments at 2 and the house price is actually selling at 1.4. So it's totally backwards as to what we're used to. But again, those are just some examples that we're seeing out there. In the condo space, to me, it seems like it took a noticeable shift in April. I would say that condo prices are actually off from their peaks in Vancouver area, at least by 4 or 5%. Speaking with one of the luxury realtors that does luxury condos in Vancouver, he has that segment off by about 10%. Again, now you can either agree with that or disagree with that, but we're starting to see some movement. So you just arm yourself with the market information and you go out and you make your best decision possible. Again, whether that's taking that information and going out and buying something and using it as leverage to negotiate, or whether that's sitting on the sidelines and waiting for a better deal, or whether that's offloading some investment properties at, arguably still close to peak prices. You make your decision. All right, I'll see you next week.